Yeah, so hi, actually, let me tell you the reason you're over here. So, the budget
Mhm.
got introduced like a couple of days ago, couple of weeks ago, and then the people got all confused about how to pay 30% tax on the little profits they were having like at the start of
Right.
the year. And there were a lot of confusions around it that who needs to pay what kind of taxes, and that's the reason I picked up some questions from the community and I thought of bringing down a CA that also after I saw your tweet, you actually made a tweet about all the tax regimes by clearing out what type of taxes need to be paid. That was a really interesting thread, by the way. So that's the reason I called you up and thought let's have a 30-minute call on all these things. So these are the questions that I have, and if you can give like a 2-3 minute explanation on each one of this, it will be a lot better for the community, I think. So let's start with the question. So let me ask you the first one that
Yeah. Just before we start, wanted to clarify one thing that I'm
yeah.
not yet a chartered accountant. So
uh,
I'm a CA finalist. I've cleared one of the groups of two groups.
Still
So
you, yeah, still you know more than me about taxes, so that's a very plus point. Yeah.
yeah, yeah, yeah.
So yeah, so the first question is that they have said that there are no exemptions allowed on the crypto tax, and does this mean that this also includes the income tax slab, and will everyone be taxed irrespective of the income tax slabs and so on?
Okay, so see, basically, when what they mean by no exemptions is that you cannot claim any deduction apart from your cost of acquisition. That means whatever are your blockchain network fees, or if you have bought NFT, you would have paid some royalties, those royalties, or whatever exchange fees you would have incurred, all those will not be allowed to you. That is what they mean. Now, to identify whether you're going to get benefit of income tax slab, you need to see where the section has been inserted in the whole act. It has been inserted in a particular place where all the items are taxed at a flat rate, irrespective of the slab rate. So on that
Correct.
basis, you can conclude that this is also going to be a flat rate, irrespective of giving you the benefit of income tax slabs. So what the section says, irrespective of that, since it has been included with all those sections where they are taxed at 30% flat, it is also going to be taxed at 30%.
So it doesn't matter like if you are in the 2.5 lakh rupees bracket or the 5 lakh rupees bracket, you got to pay 30% tax.
Yeah, you got to pay a flat 30% tax.
Okay, so the next question is like it is also very similar that if we get paid in cryptocurrencies, like there are people who are working for all these DAOs and all these companies, so they get
Yeah.
paid in their native tokens. And what if they make like less than 5 lakh rupees a year? Can they still like they need to pay the 30% tax still if they make less than 5 lakh rupees?
So see here it is going to be divided into two parts. Like for example, let us take you worked as a marketing manager for one of the crypto projects and they paid you $1,000 as your salary. This $1,000 will be taxable as your slab rate as salary income as soon as you receive it.
Mm-hmm.
Right. Now you are not going to sell it as soon as you receive it. You might liquidate it after a few days. Like say on the date you received, the one USDT was worth 78 rupees. Now after 2 weeks, if you are going to liquidate, it is 80 rupees. So now you made 2 rupees gain on those $1,000
Mm-hmm.
from the
For
date
each
it was
dollar,
your
yeah.
salary to the date you sold it. So
Mm-hmm.
on that 2000 rupees gain, you will have to pay tax at 30%. The balance, whatever 1000 USDT you got, will be your salary and taxable at slab rates. Now, why I'm saying this is very important is because Section 115 BBH says you need to pay tax only when there is a transfer. Now, transfer has been defined in Income Tax Act to mean either there should be a sale, there should be an exchange, or there should be a surrender of an asset. Now, when you're receiving, it is not a sale for you. You did not exchange it for anything. You have not surrendered any of your asset. Now, when these three conditions are not satisfied, it is not falling under that section and it will be taxable as per your normal slab rates.
So like anyone can show it under his or her income, right? From like if he or she is a freelancer, he can just show it like a business income or stuff like that, right?
Yeah. Yeah, that will not be an issue. You will be taxable at slab rates.
Perfect. The next question is related to the profit and losses. So, suppose a person makes 50,000 rupees profit in one trade and loses 50,000 on the other. So the overall profit becomes zero for a financial year. So do they need to pay any taxes for the 50,000 rupees profit they made, or like it is zero entirely?
Yeah, so this is one of the controversial point that is coming up, I must say, because see, like I told you previously also for the slab rates, It has been included with part of those sections which are directly taxed at 30%. Now, what happens in those sections is that it is clearly written that if you make any income, you have to pay flat 30% as your tax. But when we see this section 115 BBH, which is exclusively for crypto, this is rather more detailed. They have gone into more detail to explain what all expense you can claim, what all losses you can set off, right? So here there is one school of thought where a particular community says that you will not allow any losses for the reason that it is included with sections like betting, gambling, where it is not allowed. So this is one school of thought. But what I believe is, since the section is rather more detailed, they've explicitly mentioned there that we will not allow you any losses, right?
Yeah.
For any other income that you have.
Mm-hmm.
So that indicates to an extent that we will tax you on a net basis and not on your gross basis. So in my view, I think there will not be any taxes, but I think the government is going to clarify that. And one more reason is that those sections, they directly tell that if you make any winning from gambling, we will tax at 30%. They don't go ahead and rather mention specifically that no tax will be allowed for you to set off if you make a loss. That time you need to think again, why in crypto was there a specific clause added telling we are not going to allow? If the treatment had to be
Exactly.
same, they could have rather not told that.
Correct.
Right. So this is the reason why I believe that we will be taxed on a net basis and not gross basis. And again, see, comparing it with gambling, you don't gamble 1,000 times in a day, but you might have 1,000 trades in a day in crypto. So again, that is one more logical point of view to say that it might not be taxable on gross basis.
So like another thing I saw on Twitter is that people can't carry forward their losses. So if someone made loss this year, they can't set it off next year, right?
Yeah, exactly. They will not be able to set off the losses. It is mentioned specifically there.
Cool. The next question is what if someone doesn't sell their crypto assets and plans to hold them forever? Like, do they need to pay any taxes if I just go around and buy Bitcoin for 1,000 rupees and I just don't sell them forever?
Yeah, so in that case, there will not be any tax because, see, like I told you, the sections of TDS and the section of tax at 30%, they both apply only when there is a transfer. And transfer happens only in three cases. Either you sell the asset, you exchange the asset, or you surrender the asset. Now, if you go on buying, neither there is a sale, neither are you exchanging it with something, nor are you surrendering it to someone. So when those conditions are not satisfied, you're not liable to pay tax only on that.
That means holders are safe for now. They can just keep stacking
Yeah,
BTC.
yeah, yeah. Holders are safe.
Next question is like, what if someone does P2P transactions? Can government track those? Like, for example, I go out to some person in the street and I say them like, will you buy Bitcoin from me directly and pay in cash? So what happens for that? Like, is that a tax evasion and a criminal activity?
See, actually, it is not directly a tax evasion. I cannot say that, but you will be directly defaulting with the TDS provisions because TDS has been included where if you are crossing a certain limit, you will have to deduct TDS at 1%. Whenever the opposite person is selling to you, you will have to deduct 1% TDS and pay the balance amount to his account.
Mm-hmm.
Now here you will be defaulting on that if you cross the limits. Like if you are having your business income of more than 1 crore, or you are anyone other than an individual or HUF, your limit will be 10,000 in a year.
Mm-hmm.
Or if you're having up to 1 crore business income or you don't have business income, then up to 50,000 you can buy without deducting TDS. Once you cross that threshold, you have to deduct TDS at 1%. Now what happens is you can do P2P transaction, you did not deduct TDS. Now the government is not going to come to know as to how this transaction happened and whether you acquired crypto. When they will actually get to know is when you get this crypto into any Indian exchange wallets, because you will get it and you will sell it. As soon as you sell, the exchange is going to deduct TDS on your pen and they're going to remit it to the government.
Correct.
Then the next question arises, if you have sold, from where did you acquire? That is the question you're going to be asked.
Yeah. So
So
like
that is how it is
technically,
going to be.
yeah, so technically, like if you are anytime trying to deposit it on an exchange, then you have to kind of pay taxes because the exchanges will report it to the government, and then you might be faced with questions like, why did you acquire it? So,
Exactly.
yeah, in the long run, it's going to be a lot tedious than just simply paying the taxes on time.
Yeah, exactly. That is just not going to be right for you.
The next question is like, people are asking, how can I claim my 1% TDS back?
Yeah, so see, TDS, how it works is it is almost like your advance tax. Like whatever income you make in the current financial year, you are going to file your return in the next year, right?
Mm-hmm.
So what happens? If you are a salaried person, you will be knowing that every month out of your salary, a particular percentage is deducted as TDS.
Correct,
That is
correct.
nothing but the advance tax which you are paying to the government in the current year itself. So that in the next year, when you calculate your total income, from that, whatever is your tax liability, you're going to reduce whatever TDS you have remitted. And whatever is the net, whether it is payable or refundable by government, that you will have to settle it at that time.
That means if
So
you, yeah, if anyone files taxes at the end of the financial year, he or she can just get back a refund from the government.
yeah, you need to file your income tax return to get back that refund.
Okay, and like if someone makes losses and still keeps paying this 1% TDS, so he or she would be eligible for a refund, right?
Yeah, exactly. So since TDS is deducted irrespective of whether you make a profit or loss, it is directly on your sale value. On your sale value, exchanges are going to deduct 1% TDS, or if you do P2P, you will have to deduct. The buyer is going to deduct. Now, if you make a loss, your capital gains is anyways going to be zero because there will be no gains on that, since it is taxed on the net basis. So your tax payable is also not going to come at any point. But you have already remitted some amount as advance tax, which is your TDS. So that will be refunded to you.
Cool. The next one is like if someone trades on an international exchange, say some unknown XYZ exchange that operates internationally, and they trade on Tether and stuff. So how will the government come to know about TDS? I think it's similar to like that question, na, ki, if I plan on buying P2P transactions, can government track and trace those? The question comes back like if anytime you deposit on an Indian exchange, you will be tracked into the questions of how did you acquire it. So like, if you can give more clarity on that about all these international exchanges that might not deduct TDS.
Yeah. So see here, there are two things. One is your P2P transactions, which you are doing. P2P, you may be doing majorly only with your Indian counterparts. Like the opposite party is always going to be an Indian who is having an Indian bank account. So that would not be an issue for you. But when we go to international exchanges, there actually comes a difficulty because the exchange is not going to tell you who is your seller. So even if you want, you cannot deduct TDS. So that is a practical difficulty in applying the whole section itself.
Mhm.
Now, this is on your part as a buyer. Second part is whether international exchanges are liable to deduct TDS. They are not liable to deduct TDS. Reason being, if they are not situated in India, they do not fall under the Income Tax Act itself. So when you don't fall under the act, you are not required to comply with any Indian laws. So they are not bothered about whether India applies TDS or whatever rate India applies. They are not going to comply with any of that. But you as a buyer, they are going to ask you why you did not deduct TDS. So at that point, you need to tell that it was a practical difficulty. I do not know who is the opposite person. Hence, I could not deduct. The second reason can also be that it is an international exchange. Most of the users are also international. So TDS provision will not apply if your counterparty is a non-resident Indian.
Mhm.
Means who does not reside in India for at least 182 days is a non-resident. So if it is that person, then also TDS is not required to be deducted. So these two things can be elaborated.
The next is also similar. It is related to a DEX. So if I go out and make a trade using MetaMask on Uniswap, for example, so I don't know what will happen because the trade happens using a liquidity pool. So who will deduct the 1% TDS? Who will pay taxes and etc. on all those things?
Correct. Yeah. Yeah. Again, continuing the international exchanges point, international exchanges to certain extent, if they create an office in India, you can tax that. But when you talk about decentralized exchanges, they are created on the blockchain. They live throughout the world. Now, at this point of time, no one knows how the government is going to implement laws for them, or rather, it is impossible to implement any laws on any decentralized protocol. The reason being, firstly, your counterparty is anonymous. Second, your counterparty is providing liquidity into a pool where two or more people can be there. Even they are anonymous. Third person, the person who is operating the protocol itself is anonymous. So there is no point in which even if government wants, they can come and make you comply with that. So in my view, on any decentralized protocol, none of that laws are going to apply in any case.
So, like people who are trading on a DEX after 31st of March, they still have a little bit of room to play around with how they can look at things. Like, yeah.
Yeah. Yeah, exactly. If you are a core trader, then it is better you stick to international exchanges or decentralized exchanges for now.
The next one is like assuming if someone makes a rupees 1 lakh profit in a year but keeps the funds on his or her WazirX account or Coin-D6 account, for example. So do they need to pay any taxes on it because they like, didn't take it to a bank account? I think they need to pay taxes.
Yeah, exactly. So see, like I told you, you need to pay tax when there are when one of the three condition is satisfied. Either you made a sale, you made an exchange, or you surrendered any asset. Now, in this case, you made a sale and you incurred 1 lakh rupees of profit. So you are liable to pay tax irrespective of you withdrew to your bank account or not. Now, see, there might be another case that you traded Bitcoin with USDT, and in that you made a profit, which you did not convert to INR. Okay, and that INR, that USDT is still lying in your exchange wallet. Still, you're liable to pay tax because you made a profit. In whatever currency you make a profit, you need to pay tax at 30%.
So like if someone makes $1,000 profit, they need to pay 300 tether or like 300 tether converted to INR to the government.
Yeah, the fair value on the day on which you made profit, you can take that conversion rate and convert it, and on that you will have to pay 30%.
Uh, correct. And lastly, some tips from your side how one can save taxes after 31st of March.
Yeah, so like as I told you, see, this is clubbed with those sections where really you don't have any option of making any tax savings in any way. But still, if you are someone who is making like a good amount of profits and still you want to save it, there can be two cases. One is, say you bought some token where you got wrecked, you lost whole of your investment. So the ideal solution for you would be to not sell those tokens when you're already net position during the year is a loss. You just
Uh,
don't sell those tokens. Whenever you're having any profit, sell only to that extent those tokens, so that your loss is going to be on a net basis zero for that year. So this is one of the things that you can do. Now, the second thing is many people will be having any losses in their futures and options position when they are doing leveraging.
mhm.
It might be that you want to hold the position for 6 months, but there is a sudden dip in the market, which you believe is still going to recover and you want to hold it. Whenever there is a dip, you just book the loss in your position and then create a new one. You can use any Excel sheet to keep a track of this. But then if you do this, whatever is the loss that you have made will obviously get set off with any profits that you have. So in my
Uh,
view, these are the only two strategies that are available as of now.
so
Because
like
rather everything is very simple that you have to pay tax at 30%. You cannot escape that.
So, like, you mean to say if someone has a ton of shit coins, hold it right now. They just need to keep holding it because you can set it off sometime if you make a hefty profit in future. And if someone is doing futures and options trading, taking all that leverage and stuff in Binance, etc. So you
Yeah,
just need to close your position after you have a heavy loss, and you think that it's going to go up in the future. So you can just set off the loss
yeah,
with the profit. Yeah.
correct. Yeah, that would be better.
Yeah, it's still a tedious job, but I think it's worth it to save 30% taxes if government doesn't reduce it.
Yeah, exactly. That would be the best option for you. It is a bit tedious. You need to keep a track of all the positions in Excel, but I think it is worth it at the end of the day if you make 1,000 rupees profit at the end of the trade, and the
Yeah.
market say dip till $600, then obviously you are going to pay tax on only $400. So from that point of view, it still makes sense to put that effort and save those taxes.
Cool. So that's I think that's all of it. Thank you so much for dropping by and sharing your
Yeah,
opinions on the taxes right now because everything is a mess up right now. I think people are just posting on
yeah,
Twitter, reduce crypto tax, and we don't know what's going to happen right now. So yeah, thanks for joining in. Thank you so much. I'm stopping the
yeah. Thank
recording.
you, Pramit.